Inventory of homes for sale in the U.S. is declining each week now. It's the end of the year, so that should be expected, of course, but we probably only have 6 more weeks of falling inventory before the spring market kicks in and new sellers start trying the market. It's going to be wild to see where next year ends up. If you watched our November webinar, we shared a first look at how the inventory of homes in the U.S. could indeed get back to normal levels by the end of next year. That scenario was really hard for me to imagine, even as late as August this summer. But if mortgage rates stay over 6 or 7%, that's how inventory will build all year. We have the Altos Research webinar next Thursday, the 15th at 10 a.m. Pacific. So we cover all the latest trends and all the leading indicators for what we can already see for 2023, including the inventory forecast of 2023. If you have buyers and sellers who need to understand what's happening right now in the crazy market, I recommend you join us. Starting in January, new sellers start planning for the spring, new buyers start shopping. So we want them to make smart decisions with the best data. There is a link to join us for that webinar, that's next week, December 15th, Thursday, 10 a.m. Pacific. Link in the description below. Click that to make sure you reserve your spot. These are limited to 1,000 attendees, and we have way more than that sign up each month. So click that now to reserve your spot. Each week, of course, Altos Research tracks every home for sale in the country. We track all the pricing, all the supply and demand, analyze all that data, and we make it available to you before you see it in the traditional channels. If you aren't using Altos market reports with your clients, your buyers and sellers right now, go to altosresearch.com. Book a free consult with our team because everybody is worried about what's happening right now. They need you to help them see clearly. The data we cover in these videos is national, but at Altos, we do every zip code in the U.S. So join us and dive in. I'm Mike Simonsen. I'm the CEO of Altos Research, and here's what the data looks like for the first week of December 2022. After the Thanksgiving week, of course, the available inventory of homes for sale drops, and it dropped by 2.5% to 549,000 homes this week. Inventory is declining, as happens this time of year, because even as some homes sell, people with homes that are listed that aren't getting any buyer traction are very tempted to withdraw their homes over the holidays. Both of these cases contribute to shrinking supply, of course. You can see at the far right end of the inventory chart, inventory's finally started the down curve at the end of the year. I've also highlighted the past several years where you can see normally inventory would be significantly lower by December than the annual peak. So in 2019, for example, there were 859,000 homes on the market right now, this part of December, which was 110,000 fewer than the summer peak of that year. Right now, we're only 30,000 fewer than this year's peak at the end of October. So that's a big difference. Inventory will keep dropping and will end the year at about 520,000 or so single-family homes on the market. This was right about where the model has been projecting for a few months. It's wild, though, that we probably only have maybe 6 more weeks of declining inventory. While during the pandemic, with buyer demand surging, inventory kept declining through March of each of those last few years. There are many years, though, that inventory, the low point is in January. New spring supply comes on the market, and this year, spring demand will be lower, so inventory will start to build in January. If mortgage rates ease down into the 5s, for example, that'll help keep demand and keep the available inventory lower. So we'll cover more of these forecast scenarios in the webinar next Thursday. When we dive deeper into the supply data, you can see how few new homes are getting listed in this chart. This is the new listings and the immediate sales chart. Each bar here is a week, and it counting the new listings that hit the market that week. So the light red portion of the bar are those that went into contract essentially immediately. During the pandemic, of course, this immediate sales phenomenon was what dominated the characteristics of the pandemic housing market, with bidding wars and homes getting sold essentially immediately after listing. So this week there were fewer immediate sales than even Christmas, New Year's week last year. We have 30% fewer new listings each week than last year at this time. And so at that time last year, of course, everything was being purchased as quickly as possible. So, mortgage rates were at their all-time lows. So the available inventory, the supply stayed lower. Now, supply is low because nobody is selling. Nobody is listing. Next week, we'll see a little rebound in the listing volume, but it's still trending lower through the end of the year. Because even as supply slows to a crawl, demand is also really quiet. We have under 300,000 single-family homes in contract right now. That's 33% fewer homes in that sales process, a third fewer than last year at this time. We have the fewest homes going into contract each week since the beginning of the pandemic. And so this is a chart of the home sales in the contract pending stage. These are pendings. These are not yet sold. So this data leads the sales data that will happen in a few months. So homes will spend 30 to 60 days commonly in this pending stage. Each bar here is the total count of homes in contract in that week. The light portion of the bar are those newly in contract that week. The far right end of the chart, you can see how small the light red portion is. There are fewer new contracts now, again, than even Christmas and New Year's week, when generally nothing happens. So you can see how few things are getting sold right now. And that's really the big story is how few transactions are happening in the moment. Purchase activity, though, picks up immediately after the new year. And we'll keep an eye on how this goes for the next 4 to 6 weeks, how quickly or slowly pendings rise in January. We've had a little good news about the pace of inflation this month. And so mortgage rates have been ticking down. And you can see the consumer response in mortgage purchase applications, which have been ticking up in the last few weeks. Our observation is that at 5.5% for the 30-year mortgage, that's probably a threshold for buyers this year. Rates are over 6% right now. If by January they drift into the 5s, we'll see it in the pendings data start to tick up as people buy homes this spring. If they stay in the 6s or 7s, the pace of transactions in Q1 will continue to be very, very slow. Homes prices continue to slide down in the second half of the year, of course. The median price of single-family homes in the U.S. right now is $415,900. This will end the year about $400K. That's the dark red line in this chart. The price of the new listings, that's the cohort of homes that hit the market in a given week, always takes a big dip over Thanksgiving. And this year's dip was bigger than normal, which is not surprising given everything else we know about the market right now. That's the light red line in this chart. We'll get a little rebound in the new listings data this coming week. But the homes getting listed for sale now across the country are essentially at the same price they were a year ago. So $350,000. So since these homes get listed now, they get offers in January or February. They close in March and April. So you can already see where those transaction prices will end up in Q1 and Q2. And there's really only downward pressure on home sale prices at this point. There's really no opportunity for home prices to increase nationally in 2023. In our price reductions data, we can see that seasonality is finally taking hold. Currently, 42.5% of the homes on the market have taken a price cut. So we've had 3 consecutive weeks of price cut declines. So that's as homes sell or they get pulled from the market over the holidays. So we're past the peak here. You can see how every year price reductions, like the deceleration of them through the end of the year and then through January, usually as well. You get new inventory in January, and so they don't take price cuts until later in the quarter. And so each line here is a year. The dark red line is this year. The light red line is last year. And so when you can see during the pandemic when Americans were buying everything, taking advantage of the ultra cheap mortgage rates, sellers didn't have to cut their prices at all. Next month, we're going to watch how far price reductions decline and at what point they start ticking up again. That'll be very telling about how the rest of the year will play out. There are just so many rich signals in the data right now. So much of the U.S. housing market happens before May each year. So we can really start to get a clear view of 2023 already. The price reductions, the price of the new listings, the pendings data. So we'll spend time with all of those in the webinar on Thursday next week. That's December 15th, 10 a.m. Pacific. Click the link below in the description to register. As I said, these are limited to 1,000 attendees, and we have way more than that register each month. So click that to reserve your spot right now. That's all the data we have time for today. Go to altosresearch.com, book a consult with our team to learn how you can interpret this crazy data for your buyers and sellers, your people right now. They need you to be the expert, and so you should join us, and we look forward to working with you. That's all the data we have time for next week. More next week.